welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get all your stock-related queries answered by the experts. We'll be live on Twitter, Facebook, as well as on WhatsApp number that will be flashing live on your screen. We're taking a look at the market, Cheryl, a weekday coming in. First day of the weekend, all thanks to the Infosys, which is down about 10% in trading there.
Absolutely. At one point in time, we had Infosys that fell approximately 15%. Very good morning to you, Shrishti, but not a good morning coming in for the IT sector in particular on back of that dismal quarterly earnings coming in from Infosys. Let's dwell in further to talk about what does this earnings mean for the IT sector as a whole and Infosys as well. So let's bring on board today Apurva Prasad, who's the institutional research analyst at HDFC Securities, to talk more on this. A very good morning to you, Apurva. Thank you so much for joining us on ET Now. And after this about 10 to 12% correction that we are actually witnessing in Infosys on back of that dismal quarterly performance, do you think right now you could say Infosys is a buy right now?
So we have downgraded the stock. We've downgraded from a buy rating to an add rating. We've cut estimates by about 5%. But yeah, I mean, at some stage, value is likely to emerge.
Hi Apurva, there is Shrishti joining in, but since after the downgrade you still hold an add rating on this particular counter, would you suggest to start nimbling in at least for the medium term for Infosys when we are seeing the stock is really down around 10% in trade today?
I think so too. So while the near-term outlook may not be great, but I think the probability of achieving midpoint of the 4 to 7% constant currency is high, fairly high. At the same time, it's quite likely that there is no structural risk to margins, despite margin band being 20 to 22%. So with that said, and with where our estimates are, and with valuations coming off significantly, yes, we do think it's an add, with the caveat that the near-term outlook and the near-term performance may not be great.
Right. Apurva, let me ask you if this is just a one-off quarter pertaining to only one company, that is Infosys, that has seen such a big downtick, or do you see a more structural issue in the entire IT sector, and are we likely to see some more downgrades happening across the board, the way how Infosys actually has come up with this Q4, this after going ahead in Q3 upgrading their guidance?
So there is an element of sectoral risk because the caution that the company laid out is beyond just BFSI. And if you see, even from the quarter standpoint, about 70% of the sequential decline was contributed from North America, BFSI, and North America communication. So there is, I think there's an element of deal cancellations, which is what the company referred to. There is an element of deferrals, which also come back at some stage. And if you look at the operating history of the company, every time they've given a guidance, they've done on an average about 150 basis points better, from the midpoint. At the same time, between quarters, the variability of guidance has been about 80%. So 80% of the times, they've either maintained their guidance or increased the guidance over the past 15 years. So that gives you some sense of, variability across different cycles. So there have been challenges in the past too. But that's the variability or the line of sight that the company typically has. So I think the ask rate on deal bookings on the large deals is about 2.2, 2.3 billion net new over the next 2 quarters. In our assessment, if they can do that number, then midpoint should not be a challenge. But yeah, this should certainly be seen as an aberration. This 3.2% sequential decline. So the past 15 years, there have been 8 quarters which have been decline quarters. 4 of that have been GFC and COVID related, and 4 outside that. So that's how much historically how it's played out.
Okay, but Apurva, today the whole IT sector is under pressure. But if I may ask that among the basket of IT stocks, which are the companies do you think are most susceptible to the slowdown, and which do you think are likely to weather the storm better?
So I think, so on one end, while you may want to look at companies which have got stronger delivery and execution, which may be able to withstand some of the challenges. So, such as a TCS, sort of more scale player and full stack. Yeah. At the same time, it could be some of the mid-tier companies which are operating at a much lower scale, but then they do continue to grow at much higher rates than some of the larger peers. So again, I would say maybe a company like Persistent Systems can also continue to outpace despite the macro challenges. So while their absolute growth rate may also come off because of some of the macro challenges, but at the same time, relative to larger peers, they can still be outperforming. In terms of challenges, I would say maybe a Tech Mahindra because of higher, exposure to a communications vertical, and that is a vertical where both TCS and Infosys have cautioned. So purely from that standpoint, and because there is a transition which is happening at the leadership level, that could show some kind of stress. We also expect some sequential decline in case of tech.
All right. Thank you so much, Apurva, for joining us on the show, giving us your take on Infosys, where you feel this is just an aberration for now. No doubt you've gone ahead and downgraded stock to an ad rating. But yes, that's the take coming in for Apurva Prasad from HDFC Securities on Infosys. But let's stay put with Infosys, and growth prospects remain good for the entire IT sector. This is according to Ravi Menon of Macquarie, and not just him. We had a whole host of experts to talk about what this Infosys Q4 or dismal Q4 numbers meant for the entire sector as well as the company. Listen in.
If large companies like Infosys, which deals with a majority of Fortune 500 and Fortune 2000 clients, they cannot predict their business or foresee the business for a quarter, then things are changing too fast. And I think that was a similar comment from TCS as well. I think the fact is that companies entered into the January quarter while there was some degree of caution late last calendar year on around impending rising rates and impending recession in US. But things really did turn bad in the first quarter because of the fallout of this financial crisis or blow up of some of the smaller banks and the CSAP incident, which actually has turned larger banks and financial institutions much more careful and cautious in their approach to business. And as a result, what is really emerging now from the commentary from these companies and some other data points that we get to infer from is that clients, especially in financial services, are deferring short-term projects. They're not canceling the projects, they're not calling out the projects, but they're certainly deferring it. My view is that terminal value doesn't change much, because when you're talking terminal value, you're taking a 20-year view on these businesses. I think the directional, overarching, major trends in terms of companies wanting to digitize, wanting to spend more, and do much more. Companies, especially in financial services, have to invest a whole lot into cybersecurity, in data analytics, and in terms of improving their architecture, because a large part of financial services globally operates on legacy architecture systems.
There's a lot of opportunities which exist in front of the IT service providers at this point in time, even though there is a cautious approach which industry is taking, given the fact that there's a lot of news around something happening around the financial sector. There's a lot of news around the recession, which is still floating around. But again, I would say that this is not impacting the end users in a big way at this point in time.
We do not think that this is a sector-wide issue, and we do not see a significant worry for long-term investors. We think that this is a great opportunity with digital transformation. We see double-digit growth being possible over the next 3 to 5 years. This particular quarter, clients have taken a knee-jerk reaction, we think, because of heightened uncertainty that happened with the SVB collapse. And also in Europe, we've seen there were concerns that a large bank could fail. So with all that, people had just put a pause on CapEx, but we think that will return. It's just a matter of maybe a few months later, we should see that come back. And structurally, we think we are on a good growth trajectory. So if you look at TCS, it has grown, right? Infy has seen a decline. And honestly, we are a bit puzzled by that because typically you see about 95-96% of your existing book of business should just roll over. So even if there are delayed project starts, it doesn't really explain a decline.
Okay, but given the sharp fall in the IT sector, all of us are looking for the buying opportunities within this space. And Nikunj Talmia, who's the managing editor of ET Now and ET Now Swadesh, says that Tech Mahindra will be the first stock to bottom out. He also gives his take on the problem that we are seeing in the BFSI space. Let's listen into his take.
This is the maturity of the market, or markets are telling you that, folks, there is a problem with IT, but the problem in Infosys is much bigger than what the IT sector seems to be, experiencing. I will not be surprised that in today's decline, Tech Mahindra will be the first one to bottom out. The logic being that Tech Mahindra gets least amount of business from the BFSI space. They get a large amount of business from telecom and other verticals. The problem is the BFSI space. If problem is the BFSI space, then the company which is not in the BFSI space is not going to be feeling the heat. It's like in the last decline of telecom, Tech Mahindra felt the heat because they had a problem with the AT&T account. That really could be the factor at play, because for Tech Mahindra, valuations are cheap, change of guard. Infosys has lost their BFSI star. Yes, how could we forget that? There is Mohit's now gone to Tech Mahindra. So I will not be surprised if a stock like Tech Mahindra, or for that matter, even LTTIS, some of these stocks actually start bottoming out in today's decline.
All right, so that's the take coming in from the managing editor of ET Now as well as ET Now Swadesh. That's Nikunj Dalmia for you. But what are our experts making of this downfall coming in the IT sector, especially Infosys? Let's bring on board Kunal Bothra as well as Ashish Maheshwari. Good morning to both of you all. Good morning, Kunal, as well as Ashish. Thank you so much for joining us on ET Now. And Kunal, let me start with you first this time around. And Infosys, I still remember that on Thursday we did have a lot of viewers asking what should they do with Infosys right now. And you said do wait for the earnings, and look what the earnings has thrown up for us. So dismal quarter coming in for Infosys. Actually, you have almost more than 10 brokerages that have gone ahead and downgraded the stock. You had the ADR in 2 days see a fall of about 11% when we were shut for trade. But now, where do you see Infosys headed from here on? Do you concur with a counter view that yes, now it is a buying opportunity?
Well, I would, believe that Infosys has just started to get into a corrective mode. So, the stance which we had pre-result, was that not to be adventurous with these kind of names, even with, a lot of confidence brewing in that maybe the worst could be behind the IT stocks. But then it's always prudent, as a strategy to wait out for the reaction post results, because that's where we believe, that the market gets into a new direction mode. So post the results, one thing is certain, that the stock may take a lot of time to try and get into any kind of a major bounce or a reversal for itself. There would be a lot of negativity. There would be a lot of shift from the institutional hands, and that process would probably take another couple of weeks, if not more, and that could keep the stock under check for some more time. So I think one should not jump into conclusion that maybe the stock has bottomed out. Technically, the stock has formed an inverted cup and handle pattern. That could also mean that maybe there could be a potential of the stock closing below that 1200 mark and even falling further from those levels. So would not be in a hurry to jump and buy Infosys at current levels just because the stock is down 10% out today.
Okay, not will be in a hurry to buy this stock after the sharp fall that we are seeing in Infosys. But Ashish, hi, very good morning. And what's your take on Infosys from the fundamental view going ahead? Because all these IT names have been multi-baggers in the past, but going ahead within the long-term view horizon, what's your take on Infosys, and rather within the IT pack, which one is your top bet?
Yes, I agree, along with those brokerages which have downgraded the stock, and there's all the reasons why it should be downgraded, because the kind of dismal performance there in Q4, even TCS numbers were bad, but not as bad what Infosys has reported, where margins have come down, there's no revenue growth, even quarter over quarter there is degrowth, along with the street is not that optimistic, though they have lowered their growth guidelines 4 to 7, which is a broad bracket. But looking at numbers of this quarter, it doesn't look like even they are going to achieve this. Another problem for the Infosys is that 30% plus their revenue comes from BFSI sector. And the way things are under pressure in BFSI sector in USA, it doesn't look like that things will back to normal very soon. And top of it, in Infosys, there's almost 68% holding is of FIs and domestic institutional investors. So any deviation from guidelines or such news is the stock will be hammered for sure. And this is what we are witnessing in Infosys. As far as the sector outlook is concerned, in my view, it will be again very stock specific, like how Nikunj was suggesting that Tech Mahindra should be first one to bounce back. Like this, even you will see Persistent will be again a stock which will bounce back fast because the kind of acquisition, almost 5 acquisitions they did in cloud space in FY22, and results will start coming in for because cloud technologies, etc. There's no such issues. So in my view, Persistent will bounce back fast. Tech Mahindra will bounce back along with KPIT, also a stock which I like. But as far as major big billion-dollar ticket or deal announcement, etc., I think this is a matter of past now, and no such deals will come in this year for those companies which are just doing software outsourcing or maintenance business.
Okay, so that's the take coming in on the IT pack, and Ashish does like Tech Mahindra Persistent as well as KPIT Tech at this point in time for the long-term investment horizon. But with this, viewers, it's time to slip into a short break, but don't go anywhere. As we come right back, we'll be taking all your stock-related queries, so stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. As we can see, the market's on the Nifty is now holding above the 17,600 mark. We did slip below that mark on an intraday basis just when we opened up for trade, and you had sharp gashes in the IT sector. But for now, you're seeing some sort of a recovery coming in some of those IT names. So HCL Tech did see some recovery from the lows. You also had Tech Mahindra that did see some recovery from the lows. There you go. Now HCL Tech, that's down approximately 3%. Tech Mahindra as well, that is now down over 5%. At one point in time, it was down over almost 7%. Persistent, LTI, Mindtree, all of them seeing collateral damage of what exactly happened with Infosys. But like I mentioned, this is a show where we get you answers for all of your stock-related queries. So we are live on Twitter as well as Facebook. You can connect to us via those platforms, or you can write to us on the WhatsApp number that will be flashing on the top of your screen. Do mention your name, the stock you're looking to invest in. If you've already invested, mention your time horizon, the buy price, as well as the quantity, and that will help our experts to help you better. And on our expert panel, we have today Kunal Bothra as well as Ashish Maheshwari. And Ashish, before I kickstart with asking all of the stock-related queries, we're seeing what is happening with the IT sector on back of the earnings. And now that you will have some more earnings trickle in, we're bound to see some sort of a volatility in those names. So what should retail investors do to make sure their wealth is protected and they are not jittery on back of these earnings?
Yes, now as result season is approaching, so 3Ks all investors need to take care in this result season. So first case, keep booking gains as soon as results are announced. If you are expecting some companies coming out with good set of numbers, and you have bought in that anticipation, so as soon as results are announced, I think you should keep booking gains first. Second, keep a formula in the result season, which is very important because the stocks become very volatile at this time. So keep a formula, 15% or 20% gain from your buy price and 10% stop loss you need to always keep. And third case, keep learning from the mistakes that you have done in past, and let's not commit those mistakes again. So 3Ks for this result season.
Okay, so that's the advice coming in for all our retail investors. But with this, let's start taking all your stock-related queries. And the first question that I have is coming from Kaushik Mitra. And Ashish, let me take it up from you. He wants your outlook on the chemical industry. He's actually holding a stock named Vikas Life Care. Have you heard of this particular counter? It's a penny stock, and would you be able to advise him?
No, actually, I don't have any view on this stock. But as far as chemical sector is concerned, now I think some green shoots we can see in this particular sector after a big sell-off that we saw in previous year. I think now companies have done a lot of expansion. Their top line will grow in this year. At the same time, they are closing big ticket size deal like how we have seen in Neogen Chemical last week, along with Nanupam Rasayan. So a lot of the changes are happening in this particular sector, and we need to be selective while selecting stocks. So in fact, if you want to take a fresh bet, just Anupam Rasayan and Neogen Chemical is still a long way to go from here.
But Ashish, taking the next query on Infosys, I'm sure a lot of investors, long-term investors, might be stuck in this particular one. You have already shared your outlook, but Subha Murli is holding 16 shares from a price of 1410 rupees. So is this a time to average this particular counter? Any advice on this one?
Yeah, I think 1200 levels are a good level to average this stock, but I think the weight will be slightly higher. Though there's a big knee-jerk reaction on account of disappointing set of numbers, but buyers are going to be there because see, again, 68% of their holding is with institutional players. So if one institution will sell, more or less another institution who will find some value or having long-term horizon will surely buy, because this is not company which is going to close down or show continuous degrowth. So some buying at a lower level will surely emerge. My suggestion will be to wait for one more day, and if some more fall comes in tomorrow's session, then you can gradually accumulate, or 1200 label, whichever come fast.
Okay, this one is coming in from Arvind Reddy. He's writing to us from Hyderabad, and he wants one good stock to invest in the pharma space. Which one would that be? Ashish, he wants a long-term view.
So my suggestion will be Glenmark Pharma. I think this is a stock which has given very good return compared to other pharma players. Along with there's very much consistency in the kind of revenue growth the company has seen, and the bottom line is also quite stable. We have seen very good rally also in Glenmark compared to peers. So Glenmark is slow and steady stock, but you'll not lose money, at least this much is sure if you invest in Glenmark Pharma.
Okay, the next question, Kunal, is from Dhananjay, and he wants a technical view on Aarti Industries as well as Gland Pharma. He didn't share his buying price, but just on the technicals, how are the charts looking, and which side of the trade would you recommend to enter in?
Aarti Industries, I would believe, is going through a bit of a very minor kind of a overbought nature of indicator. So I think on the daily charts on Thursday last week, the stock was getting into a bit of an overstretched zone. So you're seeing a cool off for for the stock, maybe another couple of percentage points, but don't expect a major gas down for the stock. I would expect that maybe close to 530, 532. The stock can find a decent bottom for itself. Gland Pharma, I would be a bit circumspect because the stock still has not given of a confirmation of a bottom formation over here. The volumes have been pretty good for Gland Pharma over the last one to 2 months comparatively, but that has not arrested the selling pressure and not even lifted the stock into a breakout mode. So we'll wait out for the stock to break past about the 1400 levels. Till that time, you can just look to avoid Gland Pharma. Just keep it on your radar.
All right, this one is coming from Ananta Krishnan. He's writing to us from Madurai. Kanal, this one was also for you. SRF is a counter, 608 shares at a price of 2,808 rupees per share. He wants to know, what's a medium-term prospect for this one?
Looks attractive. In fact, SRF was one of the stocks which we discussed last week as well. From the chemicals space, looks attractive. The stock has done reasonably well in the last 3 to 4 weeks. Short-term wise or medium-term wise, I would expect 2625 to 2700 as a potential target range. That's the resistance the stock had made in the month of December 2022, start of December 2022. So that could be a good retracement point for SRF, and that should be a medium-term target.
Okay, the next question, Ashish, is from Love Sharma, and I'm not sure whether you track this particular counter or not. He is having 20 shares of On Mobile Global stock from a price of 179 rupees, and now the stock is trading near about that 70 odd levels. So any advice on this one? Is that in your coverage list?
Yes, earlier I used to cover this, but as a stock is not going anywhere, and again the reason is monetization of their Zingari and the gaming platform, etc., is long overdue, and no fresh initiatives are there as far as new equity infusion in their subsidiaries, etc., is there. So virtually there's no growth. There's stagnancy in the company's performance, as well as numbers are also muted. So my suggestion will be to exit from On Mobile Global, because nothing is happening here. And instead of this rally should be, this correction in fact should be used to accumulate stock like Tech Mahindra, Persistem or KPIT, which will give you better return compared to On Mobile Global.
All right, this one is coming from Arvind Reddy. He's writing to us from Madurai. Kanal, this one was also for you. SRF is a counter, 608 shares at a price of 2,808 rupees per share. He wants to know, what's a medium-term prospect for this one?
All right.
All right. On that note, let's slip into a break in this edition of Buy Now Sell Now. When we come back, we'll continue taking all of your stock-related queries, so don't go anywhere.
Welcome back to Buy Now Sell Now, a show where you get all your stock-related queries answered by the experts. And continuing the same, Ashish, let me come to you for the next question. This question is from Ramesh from Coimbatore, and he's looking for a fresh investment in two counters. Firstly is BSC and the other one is CDSL. Wants to know your outlook on both of these names and any entry price to enter into both of these names. And he also wants to know your take that for the expected OFS of CDSL, is that a positive and how do you look at it?
In fact, I'm bearish on both these stocks, BSC as well as CDSL. In my view, whatever euphoria was there related to retail, onboarding, etc., is already over. And we haven't seen any major volume growth in BSC turnover, along with their bottom line is also quite muted. Same case with CDSL also. So my suggestion will be to avoid both of them. Instead of this, I'll still prefer MCX because commodity prices are quite volatile and MCX is doing good business compared to BSE here and having more dynamism there. So my suggestion will be to avoid CDSL and BSE both.
This one is coming to you only, Ashish. This one is from Indu, and she wants to know if you have any recommendation on the renewable energy sector for the next few years.
So here, one stock which I like is KPI Energy. This again into solar power projects, and they set up very specific power projects for end users. And we post bonus issuance stock is quite also attractive, uh, like where 1:1 bonus was there. So this is how you are showing 425 rupees down, but this is post bonus. So this is a stock which should be kept in radar in my view.
Okay, once again, Ashish, a question for you. This question is from Sandeep Kumar, and he's holding two counters from the cap goods space. Firstly, it's Cummins India from a price of 1447, and the other one is L&T from a price of 2130 rupees. He wants to know the long-term prospects for both of these names, any target price for the same. His investment horizon is for the next 4 to 5 years.
Cummins, we have seen some downgrades coming in. That is why the stock has come down by almost 100 odd rupees in last few trading sessions. So Cummins is a stock which I'll avoid at this price point. Though L&T is a good stock, but as we have seen very big run up in L&T of late, so some profit taking is coming. So, but my session will be if L&T falls by another 50 rupees more, then you can start investing in Larsen Tobro. But at the same time, Cummins is avoid. Instead of this, I'll prefer Linde Energy, which is or Linde India, which is a better bet in my view in capital goods space.
This one is coming in from a viewer who's not, Swati is the viewer's name, and Swati has 100 shares of PNB Housing Finance, which she purchased 10 days ago at the price of around 468 rupees per share. She's losing more than 10% in this particular buy. She wants to know what should she do, look to exit it or continue to hold on to it, and if she should look to exit it, Kunal, do you think IT stock like Tech Mahindra would make sense, or do you have any other stock that she can look at in case you are advising on an exit?
So first of all, I would not advise an exit on PNB Housing, even though the stock is down 10% from your cost price, because I think the stock had seen a very strong uptick from 360 levels to 460 plus on that single day, and now it's seeing a bit of a profit booking mode. It's not yet filled the gap which it had created that day, so that would probably be an indication that maybe the trend could be on the upside further for PNB Housing. I would suggest to stay put on the stock price. And for the IT stocks as well as the other baskets which you mentioned, I would believe that it's better to wait out for some more time, at least another couple of trading sessions, let the result pan out for most of these IT stocks, then look at the price action. For stocks which gain a lot of confidence post their results, that's where I think you should look to invest rather than stocks which have been falling down significantly. So I would suggest to wait out for these large cap IT names to deliver their results, and post the reactions of the prices post the results is where I think you can probably take a call.
Okay, Kunal, the other question is on another result candidate, that is HDFC Bank. After almost in line set of numbers, the profit was a little bit weak than market expectation, and the stock is also down around 2% in trade right now. The question is from Karthik Raja. He entered into HDFC Bank futures from a price of 1655 rupees, and he wants to know the technical view on the same, any stop loss and the target price on this particular counter. What's your view?
So yeah, the results were quite okay for HDFC Bank, but the stock entered into the results on a bit of an overbought territory, and that generally happens when there's a lot of expectations built in for the stock price. So it was more of a case of buy on rumors and sell on confirmation for HDFC Bank. I think that's why the stock has corrected post results. My expectation is that after such kind of a price action which you've seen today for HDFC Bank, the stock would probably correct a bit more from current levels. So wouldn't be surprised that it may probably come back towards 1640, 1642 mark. So if you're looking to buy back, as a strategy, you can book your profits at current levels and then look to buy back in the stock corrects towards the 1640 mark.
Okay, this one is coming from Mahalakshmi, writing to us from Hyderabad, and for the long term, she's looking to invest in the banking counters, Ashish, and she's selected HDFC Bank and IDFC First Bank in the private sector space and SBI and Bank of Baroda in the public sector space. Do you think that this is a good decision? These stocks stand out amongst the banking pack?
Yes, all these four stocks are having good potential, and you can invest fresh at these levels also. Though in private sector bank, my first bet is Axis Bank, but in my view, after this correction in HDFC Bank, now it looks also attractive. So you can invest here, but still I suggest some part of money compared to HDFC and though you can invest in HDFC and IDFC, but some money you invest in Axis Bank also, which can give you better return, because I'm expecting very good set of numbers from Axis Bank in this quarter.
Okay, Ashish, coming to you for the next one. The question is from Ghosh Dada from Delhi, and he's holding 2,000 shares of Global Health from a price of 460 rupees. He wants to know your advice at this point in time. Is that an add more for this particular counter, since he is at a mild profits in this particular counter, or rather you would suggest to book profits in this one?
Invested in health related stock, and Global Health is a good company to remain invested. Just be there.
All right, this was coming from Chandrasekharan from Chennai Canal, and he has Persistent 25 shares at an average price of 4,800 rupees per share. He's asking whether he should look to average at current levels or sell and exit, considering the downtrend that we are seeing in the IT space. Persistent also is not spared at this level. Or should he stay put with it and hold on for the next 1 year and aim for a target of above 5,000 plus?
Well, I think you should stay put with it. I understand that the IT stocks are through a correction. I think we've discussed this extensively, but my sense is that Persistent could probably be getting into a bottom formation. The stock has had a previous support of 3,800, 880 mark, so which means that that's a very strong support zone, and the stock may bounce off from those levels. So I would suggest to wait out. In case if it corrects towards that 3880 mark, that could be a zone where you should look to even average further.
Okay, today I guess it's just we are discussing on the IT and the banking names, but Kunal, the next question is on a banking counter. This question is on HDFC Limited from Hitesh, and he's holding the shares from an average price of 2,250 rupees. Should he hold on or buy on dips would be the strategy for him? His investment horizon is for the long term. Your advice?
Yeah, I think you should hold on to HDFC Limited if your buy price is at 20 to 50 mark, which means it's almost at 2022 lows for the stock. So which means it's a good buy price. You already have a cushion of more than 20% sitting in profits for HDFC Limited. I think you should stay put.
Okay, this one is coming from Mehnak, writing to us from Kolkata, and wants to know about IEX, if it's a good buy or no. Kunal?
Well, yeah, I think I've been advocating IEX, specifically a zone of 125 is what I had mentioned, 125 to 130 as a major zone where the stock should be a good value buy. It's bounced off twice from those levels in the last 2-3 months, would still maintain that stance that that's a very strong support zone for IEX. So you can start at current levels. In case if there is any major correction coming by for the stock and it happens to come back to that 125, 130 zone, look to accumulate further.
Okay, so Kunal sticks to his view on IEX, but Ashish, coming to you for the next one. Sandeep is holding 100 shares of Bajaj Consumer Care from a price of 200 rupees, sitting at a loss as the stock is near about 160 odd levels. He wants to know the future prospects of this particular counter and any targets when he's looking for a long-term investment in this one.
Bullish as far as Bajaj Consumer is concerned. If you have to go with any particular FMCG player, you need to focus only on two stocks, which is HUL and ITC. And in fact, ITC has given a good breakout now, and the kind of buying we are witnessing from institutional investors. I think there's a stock which has long way to go. So my suggestion will be to exit Bajaj Consumer and enter in ITC. My target for next 12 months is 500 plus in ITC.
All right, let me take this query coming in from Mr. K. Parthasarthi, who's a senior citizen writing to us from Chennai. In Kunal, he wants technical view on two auto counters to be particular. He wants one on Bajaj Auto. He's purchased it at 3,800 rupees per share. He wants to know whether he should go ahead and book profits in Bajaj Auto right now or wait for some more upside. And the other one is on Tata Motors, 385 rupees per share is the buy price for this one. Here also he's asking, should he book profits or wait?
Well, I think you should look to hold on to both of the stocks. Bajaj Auto, I think, looks attractive. 4,400 is the target which I had outlined for Bajaj Auto. So you may wait for another 150 rupees on the upside. That should be good, 4%, 5% from current levels. And even for Tata Motors, I think the upside potential is significantly high. The stock has just recently broken out on the back of news flow. My expectation is that the stock should scale past about the previous year high, which is around the 550 mark, and go beyond that as well. So if you're not in a hurry, then I think you should look to hold on to both of them.
Okay, hold on. Coming in for Bajaj Auto as well as Tata Motors. But with this, viewers, it's once again time to slip into a short break, but don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Last leg of taking all of your queries. So let me try to fill in as many as possible. And this one's coming from Vijay. He's writing to us from Chennai. Kunal, he's holding LIC at an average price of 702 rupees per share. He's asking what's the time horizon that he can see LIC cross 800 rupees per share right now at 540.
Yeah, I'm not sure of the time horizon, but I think sub 600 levels, 550, 545, where the stock is trading right now. It looks to be that it may go through a time-wise correction more than a major price-wise correction. So patience is required over here, more than the price appreciating on a significant basis or going into a very sharp correction from current levels. So if you're okay with that, maybe holding for another 6 months, 1 year or more, then I think you should stay put with LIC India at current levels of 544.
Okay, moving on, and Ashish, the next question is from Bala from Chennai, and he wants your outlook on two counters. Firstly is Jubilant Ingrevia, and the other one is Rain Industries. Are these good bets for investment for the next 1 to 2 years? All these stocks have given no return, or rather, they have been declining on a YTD basis.
Yes, and they will continue to underperform market also. So my suggestion is if you are holding this, exit, because there's not there's not too much happening in both these stocks, Jubilant Ingrevia along with Rain Industries. If you want in any other stock instead of Jubilant Ingrevia, I suggest when to go with Marksans Pharma, which can give you better return compared to Jubilant Ingrevia. At the same time, this Rain Industries is not a stock which I like much because the kind of muted performance company is giving for last few quarters. So instead of this, go with a prominent cement play, which is Ultratech Cement, where my target for next 1 year is 9,000 rupees plus.
All right, this one is coming from Girish. He's writing to us from Bangalore, and he's holding Adani Green, Kunal, at an average price of around 980 rupees per share. And he's saying he's holding this counter only since the last 21 days. He wants to know whether we'll see this one bounce back and surpass the 1,040 mark anytime soon.
Well, I don't track the stock, frankly, that closely. So I'm not sure that whether the stock will scale past about the 1,040 mark. But my sense is that, why look out for investing into these high beta stocks and just look out for a 5 to 7% kind of upward trend, which is laced with so much amount of risk and volatility for the stock. So I think I would suggest as a broader call to switch out from Adani Green to some other formidable large cap names. I think something like HDFC Bank, even Tata Motors at 470 looks fairly attractive to me. So my suggestion is to switch from these stocks towards formidable large cap names.
Okay, Ashish, the next question is from Matthew from Muscat, and he's holding 1,000 shares of IOL Chemicals, and he bought these 2 years back at a price of 397 rupees. He wants to know, for the long term, any target price, should he accumulate this counter, hold or sell, given the fact that in the recent past the stock has been rising sharply?
Yes, I'll suggest to remain invested in IOL Chemical. As earlier I was stating that these companies, particularly chemical companies, have bottomed out now. And wherever the strengths are there or demands is there of their products, these companies do well. Another good thing which has happened in chemical sector is most of these companies have deleveraged themselves, and the kind of free cash flows were available in last couple of years. All the expansion are done by internal accruals primarily. So even IOL Chemical is a good company which deserve merit. The stock has seen a high of 500, and from that level we have seen correction. But now again it is getting accumulated. So remain invested here.
All right, with that, let's kickstart with the rapid fire then. And this one is coming from Amit. He's writing to us from Mumbai. Kunal, for the long term, ITC, Bajaj Finserv, worth a buy at current levels?
Yes, both of them are a buy.
Okay, Ashish Subramaniam from Chennai is holding 60 shares of Welspun India from a price of 65 rupees. Is this a good time to book profits?
Yes, book profit and shift to Welspun Corp, which can give you better return.
Okay, Avanti Feeds is the stock name. Kunal Renukeshwar from Bangalore has 150 shares at a price of around 110 rupees per share. What should the strategy be? Hold, exit or average?
Look to hold, average closer to 350 mark.
Okay, Ashish, the next question is from Kiran Bedi. He's looking for a fresh investment in Tamil Nadu Mercantile Bank. Is that a buy at these levels? His investment horizon is in the short term, 1 to 3 months.
Oh, I suggest instead of this, you buy Karnataka Bank, which can give you better.
Okay, this one is from Sanjay from Telangana. Archean Chemicals, worth a buy at current levels, Ashish?
Which
Archean Chemicals, the latest entrant.
Okay, so instead of this, I'll prefer more Neogen Chemical or Anupam Rasayan. In my view, these stocks have more potential.
Okay, Ashish, which one do you like between Deepak Nitrite, NCC and Bharat Dynamics? For the long term, any two picks amongst these? This question is from RK.
Bharat Dynamics pick number 1 and NCC pick number 2.
Kunal, Rakesh from Ghaziabad is asking whether one should look to buy Tata Motors or Tata Motors DVR.
Both of them are similar in terms of direction. Tata Motors is what I would prefer.
Okay, Kunal, Shiva is holding 20 shares of ITC at an average price of 350 rupees. What's your target price on this one? And still, can he add on for ITC?
Hold is what I would recommend.
All right, the next query that I have is coming in from Subramanian from Chennai. Wants to know about Welspun India, 60 shares at 64.6 rupees per share. Kunal, should he look to book profits now?
Yeah, I think it's a good zone where you should look to book profits for Welspun.
Okay, Ashish Mohit is holding 50 shares of TCS from a price of 3,170 rupees. Is that an accumulate for this particular counter? His investment horizon is for the next 5 years.
No, it's still 5 years. It won't give you, the return which other tech companies can give. So I'll suggest either go with Coforge or Persistent System. Sell TCS.
All right, and with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, as well as Ashish, for joining us on the show, talking about the IT sector, especially Infosys, the way forward, as well as resolving all of our viewer queries. And viewers, with that, it's a wrap on this edition of Buy Now, Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. Stay tuned, but Markets at Noon is coming up next.